Factory activity remains depressed, but some bright spots are appearing. The Absa Purchasing Managers Index stayed in contraction territory during June, marking the 8th consecutive month of a reading below 50, but did improve 5.4 points to 48.5. This suggests that despite ongoing headwinds, demand conditions improved and cost pressures eased. A statement from Absa says that the latest reading suggests that the manufacturing sector may be turning a corner, but structural logistical challenges are nevertheless still a risk. Here's Absa CIB's economist Selo Sekele with more.
The increase was broad-based. So we saw 4 out of 5 sub-indices increasing, but the main increase came from demand, especially domestic demand. In terms of the level of demand, I can say it's not that strong. I think the term to use is lukewarm in this instance. And then if you look at the external side, yes, there was an improvement, but it remains quite subdued in that front.
Illegal mining remains a major threat to South Africa's mining industry. That's according to Minerals Council CEO Mzila Mthenjane, who has urged government to approve a dedicated strategy and clearer laws to tackle ongoing theft and smuggling. Speaking in Parliament, Mthenjane said the deaths of 72 illegal miners in Stilfontein earlier this year pushed the sector to better understand the drivers of illegal mining and the potential of formalizing artisanal and small-scale mining. He stressed the importance of a proper legal framework to support small-scale miners and clamp down on illicit activity. The state estimates there are about 6,000 abandoned or derelict mines in SA, with nearly $1 billion lost each year to illegal mining. New car sales are gaining speed, with motor industry body NAMSA highlighting what it calls unwavering momentum. South Africans bought just over 47,000 new cars and commercial vehicles in June. That's nearly 19% higher than last year. Exports also rose and registered a 7.9% increase. After 4 months of consecutive declines, fuel prices are heading up. Motorists will face sharp increases from midnight. The Department of Mineral Resources and Energy says petrol will rise by 52 to 55 cents per litre, while diesel jumps by 82 to 84 cents. This comes despite a slightly stronger rand over the past month. Officials say the main driver is a spike in global oil prices, fueled by rising tensions in the Middle East and recent attacks by the Trump administration on Iranian nuclear facilities. Investec has grown its corporate client base. The niche private banking and wealth management group's annual report shows that it had about 2,100 corporate clients at the end of March. But this isn't its only focus. The firm plans to make inroads in the increasingly competitive mid-corporate banking segment. To achieve this, it plans to create a single platform for mid-sized South African corporates to holistically manage their banking needs. Meanwhile, Investec UK business has hit its target of zero thermal coal exposure in its loan book 2 years ahead of schedule. And the bank is confident it will meet its South African target in the next 5 years. According to the group's annual report, exposure to thermal coal as a percentage of total core loans and advances was 0.05% at the end of March. This comes as Investec has committed to facilitate £18 billion in sustainable and transition finance by 2030. The UK business aims to contribute £14.9 billion towards this target, while the SA business is expected to contribute £74 billion. Hyprop's lightening its portfolio. The retail-focused REIT is offloading a 50% stake in Hyde Park Corner in Johannesburg. That's in a deal worth R805 million. The agreement includes an option for the buyer to snap up the remaining 50% of the property from 2027. Hyprop says the sale supports its plan to invest more in the Western Cape and Eastern Europe. It's also cited a focus on larger regional malls rather than mid-sized ones. The proceeds will be used to reduce debt and asset management initiatives, organic growth opportunities, and to further solar PV projects. Truidor is sharpening its focus. The group, known for its security barriers, is selling Taylor blinds and NMC for R90 million. It says the two businesses haven't met expectations since being acquired and that their return on capital is lower than Truidor's. The proceeds from the sale will go toward paying down debt, cutting overheads and boosting returns on capital, all part of a renewed focus on its core business. Further afield, prices of Chinese-made goods sold on Amazon are rising faster than overall inflation, a Reuters analysis of 1,400 products reveals, indicating that tariffs are impacting U.S. consumers. Here's more detail in this report.
Prices for goods made in China and sold on Amazon in the US are rising faster than inflation. That's according to a study done for Reuters by analytics firm DataWeave. It shows that the median price for a basket of such goods rose 2.6% between January and mid-June. Over roughly the same period, the core consumer prices index rose at an annualized rate of about 2%. DataWeave focused on 1,407 items sold on Amazon, where China is clearly listed as the country of origin. Products rising in price at the fastest pace included school and office supplies, electronic items like printers, and home goods like furnishings and cookware. The increase naturally varied from product to product, with some even seeing decreases. While other factors could be at play, DataWeave says the timing of the increase suggests a ripple effect from new US tariffs on Chinese goods. Its analysis comes after numerous US retailers warned of price hikes as a result of the trade war. That includes Walmart and department store chain Macy's, as well as sportswear giant Nike. However, Amazon said it had not detected any big increases in average prices over the period of the study. Boss Andy Jassy said in May that the firm was maniacally focused on avoiding increases. Earlier in the year, the US hit Chinese goods with tariffs of 145%, though the new levies have since been rolled back to 30%. Donald Trump has defended the move as necessary to rebalance global trade.